Most people think buying a second home is a no-brainer, but the truth is the real estate market has changed a lot. As of filming, in April of 2025, prices have skyrocketed, interest rates are at the highest they've been in decades, and Airbnb profits aren't what they used to be. Hi, I'm Erin of Truly Aligned.
And I'm Maximilian of Truly Aligned. In today's video, we're breaking down why buying a second house, whether that's for Airbnb or a long-term rental property or just even a vacation property, may not be the investment it used to be. And if you're serious about making smarter choices with your money, take our Wealth Archetype quiz in the description below. Taking this quiz will enable you to figure out what investment strategy makes the most sense based on your values and goals.
Let's start with a myth. A lot of people think if I buy a second home, I'll make money renting it out, the value of the property is going to increase, and one day I'll be rich. And sure, that was a great strategy, especially when interest rates were lower, like in 2020. Home prices then were more reasonable, and short-term rentals were a gold mine. But today, the reality is much different. Since 2020, real estate has appreciated at the fastest rate in US history. There's still a massive supply and demand issue where we have a huge shortage of homes in the United States. That means home prices are insanely high. And with interest rates sitting at around 7%, it's not as affordable as it used to be. And short-term rental income has dropped dramatically. Not to mention, many cities are now cracking down on Airbnb and short-term rentals. There's more regulation, there's more fees, there's more red tape that you have to go through, and some cities don't even allow short-term rentals anymore. And now you might be thinking, fine, I'll just do long-term rentals. Well, that's a whole other beast.
A lot of people say that buying a rental property will be truly passive income. The reality situation is completely different. Even if you have a property management company to rent out the property for you, there's still things you're always going to be dealing with from the property. And it's always interesting for our clients that are later in their life that have had multiple rental properties over the years. They end up selling them because they don't want to deal with the hassle of being a landlord anymore. They don't want to have to deal with tenants. They don't want to deal with people not paying rent on time. They don't want to deal with the unexpected costs that come in from renting out the property. And they just want to simplify their life. So here's the thing. If you're looking for rental income, one of the most underrated strategies is what's called the Augusta rule. This enables you to rent out your primary residence on Airbnb for 14 days out of the year tax-free. We have an awesome video called the Augusta rule below. Check that video out if you've not seen it. That breaks down the strategy so that you can get tax-free rental income from your primary residence.
Now, does that mean real estate is a bad investment for everyone? Well, no. Under the right conditions, it is a really great investment strategy. So if you're considering a second home, let's talk about what considerations to make. The first would be if you own real estate that you purchased before 2020 and you have a very low interest rate. It's probably worth holding on to that investment property because the interest rate is so low and you can make a profit off of it. The second question to ask yourself is, are you comfortable managing tenants and the property itself? There's going to be ups and downs with property maintenance, and it might not be as passive as you think. The third most important question is, can you actually cash flow from the property? You can check sites like AirDNA or Zillow to see what the house will rent for to make sure that you will actually cash flow after the mortgage, interest, property taxes, and maintenance costs. And the fourth question is, do you know how to leverage the tax strategies involved with real estate? Depreciation, 1031 exchanges, or cost segregation? These can help, but they do require a lot of planning. And if you don't meet this criteria, you might be better off looking into other options. For example, a REIT, which stands for a real estate investment trust. With a REIT, you still get exposure in your portfolio to real estate, but you don't have to deal with tenants, property maintenance, or the hassle of being a landlord.
So the truth is, real estate has changed greatly. And you've read Rich Dad, Poor Dad, and that strategy worked great in the early 1990s, 2000s, even the 2010s when we didn't have this supply issue for real estate. And now things have changed. So if you're on the fence about it, make sure you ask yourself the questions we talked about before. Do you actually want to be a landlord? Is this property going to be cash flow positive? And if you want to learn more about your unique financial situation, take our financial archetype quiz so you can unlock growing wealth efficiently based on your values and goals. Until the next time, stay aligned.